great credit, excellent, been able to get loans with ease. Hey guys, welcome back to the channel, Financial Freedom with Frank. I want to thank you guys for tuning into my channel today. I got an interesting topic, so buckle up. Let's get right into it. How many of you have ever heard of the term credit crunch? So I want to explain to you guys what a credit crunch means, how it affects you, and how it affects businesses. In late March, when the Fed did the last interest rate hike, he made a statement in his language that he can foresee a credit crunch coming. And what a credit crunch means, that means the tightening of credit. It doesn't matter if you got good credit, excellent credit, credit with your lender that you've had for years. Banks are going to start tightening up credit. And the reason this is going to happen is because as interest rates continue to go up, and actually, I'm filming this on May 2nd, and tomorrow, May 3rd, the Fed is going to announce another interest rate hike, and it's probably going to be 25 basis points, which means a 0.25% interest rate hike, guys. What this means is businesses are going to start laying off even faster now, guys, because it's going to cost businesses more money to borrow money. So what's going to happen is banks are going to stop lending people money, businesses money, consumers money, because as individuals get laid off, they're not going to be able to pay their bills, guys. That's what it means to have a credit crunch. So what it means is banks are saying, okay, businesses are going to start laying people off because businesses are going to stop taking out loans, which means businesses will stop expanding. Now they're going to lay people off. And what happens is the banks are saying, well, you know what? We're going to see massive layoffs with the rising interest rates. And what's going to happen is it's going to have a trickle-down effect. People are going to get laid off, and they're not going to be able to pay their bills, guys. So hence, credit crunch. And even if you have great credit, excellent credit, even if you've been able to get loans before with ease, now banks are going to start tightening up the credit lending process, guys, because guess what? They do not want to be left with tons and tons and millions of billions of dollars of loans being defaulted on. So this is a way for the banks to protect themselves and not be stuck with tons and tons and millions of people defaulting on loans because people have been laid off because companies are not expanding at the present time because of high interest rates. Some personal experience I had with credit crunch. So back in 2020, when the pandemic hit, I have excellent credit, and two of my credit cards, I saw my credit limits get cut. They were my Capital One cards, and I've been with them for years. Had established great credit with Capital One. But I had two of my credit cards. On one credit card, they cut like $3,000 off of it. And on another credit card, they cut $2,000 off of it. So in total, I had about $5,000 of available credit that was just taken away with no reason. And then when I called up and inquired about that, that's exactly what they told me. They said, we are protecting our assets right now. We're taking some credit away from individuals because we don't want people to overextend themselves and not be able to pay their bills. So this can happen. So I just want you guys to understand, this can happen to you whether you got good credit, excellent credit, or even average credit. This credit crunch is a real thing because as interest rates keeps rising, hopefully this interest rate hike on May 3rd, hopefully it's going to be our last rate hike. Inflation is already hopefully starting to tail off. And so hopefully this would be our last rate hike, May 3rd, this quarter percent interest rate hike. That's pretty much what a credit crunch is that banks and lenders are just tightening up the credit lending process to businesses and also consumers because they do not want to be stuck with defaulting loans, guys, as people get laid off because businesses are not taking out loans and businesses are not expanding. So what happens? Businesses will lay off. People are going to lose jobs. People will not be able to pay their bills, and the banks want to protect themselves. This probably wouldn't be that big of an issue if people would save some money, have some type of liquid cash available. But guys, 65% of Americans can't even come up with $500 liquid cash in case of an emergency. 70% of Americans can't even come up with $1,000 liquid cash in case of an emergency, guys. We just got to do a better job of preparing ourselves and having cash available and not always having to go get loans. Everyone should have an emergency fund. If you don't have an emergency fund, you should work on getting an emergency fund. An emergency fund is 3 to 6 months of expenses, of household expenses, guys. So if you don't have one in place, you should look into getting one in place. I got a video that I talked about emergency funds and savings. Take some notes and start working on getting yourselves an emergency fund. Guys, I really want to thank you guys for tuning in to my channel today. I really appreciate the support, helping me build my YouTube channel. Guys, please like this video, share this video, and most important, if you like my content, please consider subscribing to my YouTube channel. I really appreciate the support, guys. Guys, and remember, financial decisions you make today, whether negative or positive, will affect your financial future tomorrow. Thanks a lot, guys. I appreciate the time. Financial Freedom with Frank. I am out.